Hello from Otet Markets. This is Ahura. We'll be with you with the global economic outlook in the week ahead, which is going to be the week number 16 in 2025. As always, first let's have a short review on what happened previous week. Markets in previous week had an amazing recovery after United States President Mr. Trump put the pause on tariffs for 90 days, excluding the China. But generally, that move made the market to recover, especially in Europe and the United States. Uh, that was one of the main market movers. On the other hand, New Zealand central bank cut the risk by 25 basis points as it was widely expected. In the United States, we had inflation numbers. Inflation data showed that the prices slowed in March much more than expected, and even the negative inflation of 0.1%, the headline inflation fell by 0.1%. That was an amazing surprise in the market, which means that the chance of more rate cut, at least three rate cut in 2025, can be on the table. Which sounds more dovish policies, possible policies for Federal Reserve, and send the US dollar lower, much more than expected, with much more than expected levels at the beginning of the week. That was generally what happened previous week, but at the same time, the ongoing geopolitical tensions, especially between the United States and the Islamic Republic of Iran, in one hand, and peace talks, unknown fate peace talks in Ukraine. About Ukraine between United States and Russia. Also, these geopolitical tensions are also playing very important roles. We have to wait and see what's going to happen for them in the next week. At the same time, we had too many speakers from Federal Reserve and other central banks. Mostly, they were talking about the holding the current rate for longer, because they're going to wait and see how this current trade war is going to affect the economy. However, those comments, they were before US inflation data. What they will say, or what's gonna happen about their comments in this week, it will be also important. We have to follow different speakers, especially in this next weeks as well. Week ahead in United States wouldn't be such a busy week. We will have retail sales, industrial data mostly, and construction numbers. Retail sales and industrial data will be on Wednesday, where we expect to see slightly improvement in the retail sales after February recovery. So the retail sales could be the headline retail sales could be increased by 1.3%, which is much better than 0.2% of March. On the monthly basis. Annually, the retail sales should stay around 3.1%, 3.2%. We are not expecting any specific surprise here. But however, since we have these retail sales, we have these numbers, the numbers which covering the March before new tariffs effects. Many buyers probably going to buy before tariff effects. That may be one of the reasons that can support the retail sales to increase much better in the March numbers. Industrial production, on the other hand, is supposed to fall by 0.3% on the monthly base, which means economies experiencing slightly fear of us. That we know that industrial manufacturing production also didn't have such a good or bright numbers, but now the industrial production also is going to affect the negative data, which means the economy generally is worried about the ongoing tensions. Continuing on Thursday, we will have continuing initial and continuing jobless claims, which generally we expect to see continuing in initial jobless claims and continuing jobless claims. Yeah, here Thursday, we expect to see around same numbers. No surprise, 223, 224,000 claims for unemployment benefits. So the labor market we can say that is still strong and can continue the current strong resilient condition. On the housing market, we expect to see after February's fast improvement of 11.2% on the housing starts, we expect to see slightly weaker number in March, but still the numbers can confirm the housing starts improvement with 1.410 million units. I mean, the project going to be started. Building permits also supposed to increase by 1.46 million, a little bit lower than 1.40, a little bit more than 1.45 or almost 46 million that we had previously. But the same level almost, you can say it's not a big change. Housing market supposed to show slightly its continuous improvement. Out of the US, we have the inflation numbers from Japan, where we expect to see the inflation improving in Japan, especially after wages grow, which means that the central bank in Japan can think about the rate hike and its next meeting. However, out of the China, after the Japan, the China also supposed to publish too many important economic data, especially on Monday, where we are going to have the import and export data. In China, we expect to see more exports in March as many countries started to buy more, especially Americans started to buy more Chinese product before new tariffs implements. So generally these conditions can support the Chinese data to improve slightly. It shows some progress in March. Same for the retail is also supposed to increase the margin in China. But the focus in the market will be on before talking, let's talk about the before going to about the focus of the general market and the ECB meeting. I have to mention that in United Kingdom we have too many other data after positive data that we had, positive numbers that we had previous weeks. This week we expect to see the unemployment rate to stay unchanged at 4.4%, with average earnings to increase by lower pace than compared with the previous month with 5.7%, including the bonuses. But generally, the data shows that the Bank of England, with ongoing tensions, can think about the rate cut in its next meeting. But about the central banks, this week we will have two central banks meetings: Bank of Canada and Central Bank of European Central Bank. Bank of Canada is supposed to hold its rates at 2.75%, no change, as BOC is trying to understand the effect of the current tariffs on the Canadian economy. That's why we don't expect the Canadian Central Bank to cut the rates at the current momentum. So wait and see, or the wait and see policy would be the main favorite policy of the Central Bank of Canada currently. But on Thursday, we will have the central bank meeting in Europe. The ECB is supposed to cut the rates by 25 basis points from 2.50 to 2.25%. As the economy is getting under pressure, getting more pressure in the Eurozone, and inflation is controlled. That's why the central bank can think about the rate cut by at least 25 basis points, which is normal. It's expected to happen. But what we are, since the market's already priced in a cut rate, 25 basis point rate cut, the market going to focus on the statement where we're going to see the central bank in Europe. They are going to express more, talk more about the inflation progress and the tariff effects, or they are going to talk more about the economic growth. If they talk more about the economic growth, that could be a negative for euro, and as it means that the more rate cut, it means it will be negative for euro, but somehow positive, slightly positive for stock markets in European stock market. But if they talk about the effects, the adopt of effects on tariffs on the US economy, in Eurozone economy, and the inflation progress, then we can read that as a positive data for euro and negative for European stock markets. As the chart movements, you can start with the US dollar index. Dollar index previous week fell much more than our expectations. We were expecting to see the US dollar index to fall around 101 and trade between 101 and 102, but at that fall even lower than 100 and ended the week lower than 100 mark, which means that the main reason is because that the increasing the tensions between US and China lowered the rate and the security or the trust of US on the US dollar on the US dollar currency, which means that the dollar demand lowered and we had more demand for the gold and other safe havens such as CHF. That's why the US dollar index fell much more than expected. But generally, we were expecting by the downtrend. But the fast of the downtrend, the speed of this downtrend was much more than our expectations. Generally, the data shows that the current data technically also shows that the US dollar is still under pressure with the 102 as a pivot point and trading under 102 could hold the pressure on the US dollar index and continuing this downtrend. This lower pressure on the stock on the dollar index supported somehow the stock market a little bit, as the market is thinking about the trade rate cut right now and the possible effect of the tariffs. That means somehow the positive for the stock markets, while the 90 days pause on the tariffs also supported the idea of slightly more recovery. But in a bigger picture, the thing is not changed. In bigger picture, S&P 500 still in a downtrend, and as long as it's trading under 5,600, the downtrend can continue further. On the gold front, the weaker US dollar index in one hand and pressure on the stock markets on other hand, the fears of the trade tensions, and additionally supporting with geopolitical tensions, all these data and all these conditions gave a hand together to support the gold price and printing in new highs, new higher highs, always in new records. For the week ahead, also we expect to see that generally the uptrend can continue, even thought if we see some correction around 3,000, maybe even or 2,190, but generally the uptrend 3,000 especially holding 3,150 can hold the gold, can hold the bulls in a clear bullish trend, can hold the gold in a clear bullish trend. But generally, the condition is positive for gold. As for the energy market, the oil market, the trade tensions, geopolitical tensions, we don't have too much good news for oil market. However, the next week we will have an OPEC monthly report and IEA monthly report. We have to see what you're thinking about the energy outlook. These reports will affect the market directly. But generally, for now, we expect to see the gold price to move technically between $62 and $58. These levels, we don't have too many data supports to be able to support the oil price. On the cryptocurrency market, fundamentally, we don't have too much data to move the market, but technically, the Bitcoin is under pressure, and the downtrend has much more chance than uptrend, especially as long as it's trading under 90,000. Recovery above 92, 93,000 can change the market condition, but right now we are thinking mostly about downtrend with $75,000 and $78,000 at the next targets. That's generally what's happening in the market and what we expect for the week ahead. If you had any other question, don't forget to write down in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye-bye.